Look, are you looking for a new way to scale your account? You might be in a situation where you just can't grow your account consistently. You might have a great run for that first week, but that following week you seem to blow it all. Well, this video is for you. If you are a trader with low capital, anywhere from $1,000, and you're looking to scale it to about 5 figures, I'm going to guide you, as I've done this multiple times on my YouTube live stream and also in my community and also in all my videos. And I'm going to be breaking down step by step to show you guys the actual proper way to do this consistently. And get this will work for 3 particular pairs if done right, and I'm going to guide you exactly how to do it. Now, before we get started, let me show you my results of what I was able to do, and I'm going to show you that this is the same concept and strategy I'm implementing here with the Gates FX with Tradelocker. We did 30K total within this account so far, and we literally started about almost a month ago. Now, if you guys look here, this is all trading one asset, which is oil. However, as you see, it might look like a lot of trades that you see in here, but how I trade is quite simple. I do 2 setups, and each setup requires 2 trades. One of the trades, I always route it to a 1-on-1. The second trade, I always go for the 1-to-3 max. That's literally what I like to scale for. Why? Because I know a 1-to-3 can really grow an account, and this way I know I can scale my account fast, as you're clearly seeing it here. Yes, we have losses, and that obviously comes with losses, but if you look at my majority wins, we're always profitable, because with my losses, I'm not risking as much, and if it goes out my way, then I'm probably already losing a couple $1,000s, and that is just because this is what I can afford on this account. So let me show you guys the proper way to do this, how to do this, because you can do this as well, and this is possible for you to do even with a $500 account, even with a $1,000 account. This is fucking possible. Now, for this particular strategy, this is going to require a broker to trade with. However, if you guys already have a broker and you're fine with it, that is perfectly fine. This is a broker that I recommend and I actually use within myself and also in my community. And this is something that we're using currently to even grow our $1,000 accounts to $10,000 and so forth. You can go and trade with their raw spread account, which gives you up to 1 to 1,000 leverage for you to actually trade with. Additional to that, if you're trading with a $500 account, you can up that to $1,000 with their 100% sign-on bonus that they're offering. So if you guys want that, you can check the link in the description. And once you actually join and deposit and start trading, literally send me an email at joinsolonetwork.com, and I can literally get you guys in my community for free so we all can start trading together. So scalping equal traps plus breakouts. Every big move starts with a liquidity grab. This is how I ideally want each of you to identify what we call a PNH, which is known as a potential new high, and then a PNL, which is known as a potential new low. A PNH stands for the last swing high that gets swept before a reversal, and essentially the PNL stands for the last swing low that gets swept before the reversal. Now, why this is important is because market hunt stops at these zones. It creates liquidity for institutionals, then push price in the real direction. So if you guys pay attention to my drawing here, you see that we have our potential new low mapped out here, which we noticed that this area where this line was at was a potential liquidity grab or potential liquidity pull, and the market decided to sweep that. Now, one way to identify potential new lows and potential new highs for reactions like this is using one of my favorite tools that we're going to be breaking down in a little bit. But that is basically what we're going to be paying attention to while scaling this account and taking full advantage of this. Now, as far as our potential new high and potential new low equals wave 2 and plus 4 zones. What do I mean by that? So I talk heavily about Elliott Wave sequence, and a lot of traders don't realize this is what I use, and this is the backbone of my entry, my exit, my take profits, and if I'm getting in the trade too late or if I'm getting in the trade too early. This is how we pretty much catch it spot on pretty much every single time. If you are following me on Instagram, you will see a lot of our stories when we post it before and afters. You see it's pretty damn accurate. So with wave 1 is going to be the initial push, but with wave 2 is going to be that retrace, often that sweep to the potential new low, which will look something like this right here. And then for wave 3, which is my favorite, this is the sniper move. This is the breakout leg. This is what you guys are going to be trading consistently. And then wave number 4, which is another retracement, often seen as a potential new high / potential new low. And then you have wave 5, which is the final leg, which is pretty much another leg that I also like to trade. Now, here are some points that you really need to know. Scalpers don't aim to ride the Elliott sequence. Instead, enter at the trap of wave 2 or wave 4, and then you exit at the top of wave 3. And this is how you can really figure out finding these waves. So if you look at my drawing here, you see basically you have to know what a range is. A range is literally a trend, the previous trend. Meaning if you had another trend going down like this, you don't draw your fibs from here to here. You literally draw it from this high or this swing low to this swing high. The moment we draw out our fibs, we're going to be using two levels that are very important, and I'm going to break that down in the next part. Once you find those two levels, those are the levels you're going to have the best assumption that wave 3 is going to end at. So this gives you the advantage to take your take profit all the way to these levels. Another way this gives you advantage is if the market was already here and you're getting in the market right now, you would know you're already too late or you're getting close to the reversal. And this is how I'm able to figure out when I should not be getting in a trade and even figure out when to get out the trade. So if we were to use our fibs, we would be able to mark the end of the trend. And that is what I love the Fibonacci for. The fib extension and the fib retracement are going to be your go-to. If you look here, this is where the fib retracement showed us, which is the two levels I'll be breaking down, that this is where the end of the trend can be. And then we align it with previous data like previous POI levels, imbalance levels, or supply demand. This gives us an extra confident boost and more confluences that this is really a valid level that we should expect a reversal. So now after that, you want to now know how to enter in the market. The problem is we enter too early or we enter too late. The cool thing about my concept and my theory is if you catch it at this peak right here, and just to show you a prime example of what I mean by finding the right entry is this. Notice that we had the first wave. This is the pullback, which is the second wave. And then right in here, this is where we found our entry and we was able to make profit off of this trade. This is one of the biggest ways to scale and grow any account, especially $1,000 or even a $500 account. Going back to this, you want to be looking for those entries by the end of wave 2 and also by the end of wave 4. The cool thing about each wave is each wave can be measured within something called legs. And what I mean by that is each wave has 3 pushes towards the downside or 3 pushes going sideways to 5 pushes, which is something like this: 1, 2, 3, 4, and then 5. And then from there, you will expect it to go up. Well, guess what? This is my go-to method of knowing when to get in the market at the right time. And that's pretty much how we can catch a lot of these plays off of this just to head up. Now let's talk about the checklist and get into the fib points that you need. So the scalper's checklist, you want to always try to mark out your yesterday's high and yesterday's low. You want to watch for London anywhere from 3 to 5 a.m. Eastern time for fake outs, often sweeps of the PNH, also PNL, which is basically wave 2 and wave 4. And then wait for New York session 9 a.m. to 11 a.m. Eastern time for pullbacks, often trapping the PNH and PNL. That is basically saying that within New York session, you should be seeing these reactions starting. So this is probably around the time where you want to start seeing wave 3 and wave 5, which is this trend and this trend that we want to trade and scale our account. And then once again, confirm retrace into the 50, the 618 fib zone. So what do I mean by that is if we go into the live charts, I show you here, I'm going to draw out my Fibonacci from this swing low to this swing high. The moment we do that, I am expecting market to at least pull below my 44% mark or the 50% mark, or at least at the 6-1 mark for the Fibonacci retracement, just to confirm that we had the right pullback. Because once again, when it comes to wave 2 and also wave 4, my theory is I need the pullback to at least come half of what wave 1, which is this trend, or wave 3, which is another trend right here, to show me. So if we go back, we then want to wait for a power candle to close beyond the 9 EMA on the 1 minute time frame. This is how we enter the market. And then you always want to enter with a 1 to 3, targeting the negative 0.27 and the negative 0.618. So as you see here, this is pretty much the fib levels. If this was the trend, you draw it from the bottom to the top, you wait on it to pull, and then once you get those 3 legs, which would be something like this, you don't get in here, you get in once you get 3 legs, which is something right here. And then once you get it, you take your entry here and you ride to a 1 to 3, at least making sure the 1 to 3 is aligning with the negative 27 or the negative 618. And if it is, you're good to go. Here's an example. As you see here, we had 3 legs in this entire continuation. Now, if you look, we have one push, that's one leg, that's the second leg, and that's the third leg. All we're doing is just connecting the trend lines with each push that you see with the price candle. That shows that that is connected into a bigger consolidation, and this is now what we call a Elliott Wave corrective wave. And that is all we want to know when the corrective wave is done. So for any trader that asks me all the time, how do you know or when the spot, when the correction is done? I do measurements by using this theory. So now let's talk about some of the best pairs to trade to scale this account. The first one is going to be gold. It is very volatile. It respects New York open liquidity sweeps so well. I just want to show you real quick what I mean. And as you see here, we have liquidity sweeps, just sweeping everything, sweep a sweep. And then we also have beautiful Elliott Wave plays as well happening here. Gold can definitely give you a lot of these really good plays if executed right. The best window to trade gold would be 8:30 to 10 a.m. Eastern time, news plus New York equity opening. This is honestly the best time to trade it if executed right. And what I'm saying is if you can trade this at the right time, waiting on those 3 legs, you will get in once that spike already had happened, so you don't get spiked out, and then you're going to be all in your favor when it comes to that trade going up. Now, as far as the next one, my personal favorite, which is the one I really only trade, is oil. It is consistent. And what I mean by consistent is not like gold, but yes, it moves like gold. 8:30 to 10 a.m. Eastern time is the best time to trade it. Also, Wednesdays and Thursdays, you can catch a lot of great moves because that is the inventory report days. And then the strategy, I use, like I said, my PNH PNL from London sessions, also New York sessions, to identify where we're at with this entire trend right here. Are we in wave 1? Are we in a pullback? If we are in a pullback, how many legs do I need to identify? And that right there is important. And then also for GBP yen, I call this the beast, high volatility. Actually, the best time for this one is during London session. So if you are a trader that trades London, I would highly suggest getting into a Forex pair like GBP yen. Now, the most important thing I want to talk to you about is how much you need to risk. For this 1K account, I would highly recommend risking 5 to 10% per trade, which is giving you $50 to $100 on a 1K account. Aiming for always a 1 to 3 RR. This will give you the max gains, the fastest and the most efficient. And then all you guys need is 1 solid trade per day. Please do not try to trade 20 plus trades a day. That is not what we need. And in a streak of 10 to 15 clean setups can literally flip your account to 1K to 10K. Let me show you a visual aspect of this. So let's say we have a $1,000 account. Let's say we're risking 7%, which is in between 5 to 10. If we look here, one trade with just a 1-to-1 RR, we're already at $70. Of course, let's just try to speed it up a little bit. And let's just say that we get it to 10 days. Within 15 days, it's saying 36 days. But if we're doing a 1 to 3, within about 15 days, we can really scale an account to 10K. It sounds very simple, but it is very simple. As I already showed you my results earlier, just to show you one more time, I've been trading for 7 years now, and I will tell you that this is by far one of the best assets in my personal opinion. As you see, once again, yes, today we actually traded, which was a holiday, and we lost. That's fine. Still, however, as you see, the consistency for this is always up. This entire account, even though this week was a losing week so far, this entire account, if I go by this year, we already did a total PNL of almost $30,000. Now that is because I know how to scale an account based off of this same concept that I'm teaching you now. So this is 100% possible. So now that being said, if you guys want to get active with us and really grow with us, you can tap into tradewithsolo.com. This is where I teach more details of each concept, Elliott Wave, wake-up theory, all of that, entry models, and everything you need to know how to properly scale an account consistently. However, I know you probably want some signals still and you still want to learn, but if you are here just for the signals, I have that as well. So you guys want to tap in with tradewithsolo.com. I have 2 ways for you to join, whether if this is through the broker or if you want to just do the subscription. Regardless, I'm here to help you guys, even on my YouTube channel as well. So that being said, I appreciate you. Make sure you comment, like, and subscribe if you want to see more videos like this. Peace.